I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Futures are higher this morning after yesterday's decline left the market 4.6% from the 2013 highs. Investors await jobless claims and Friday's jobs report. Is the market ready to bounce, or will we see further declines? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are higher this morning after yesterday's down day. And we look back to previous pullbacks that we've seen. We've seen corrections of about 3.5%, 4.5%, being as yesterday was about 4.6%. Scott, do you think it's the start of a bigger decline, or do you think markets will shake it off as we are seeing futures higher this morning?
Well, yesterday we reached that 4.6% decline from that May 26th intraday high. So right now we're pretty much in line the same way we've been so far in 2013. So the big question is, will this time be different because we're coming from a lot higher area? We have all the talk about tapering. We have, Big Ben trying to actually, I think, bring the market lower because it got way ahead of itself. Think about it. We were up 17–18% almost in the S&P, not even half the way through the year. So you know what happens when markets overheat. You saw what happened with Japan. Japan was up 50% plus, and now it's almost down 20% off the high. So although as a trader I would love that type of volatility, it's more healthy to have a little bit more normalcy, and more normalcy is corrections, markets going a little bit slower, people thinking that it's real, not just the punch bowl. So I think overall we'll see how we handle this area, but I think really you can't have an opinion here because everyone has a different one. So we'll map out levels and we'll figure out what's next.
Well, speaking of opinions, we do have the weekly jobless claims today and Friday's jobs report, obviously tomorrow, and we know employment is a key indicator for the Fed. We actually had Goldman's economics research team put out a note this morning saying they feel as though anxieties about the Fed tapering of bond purchases is overdone. Do you think markets are overreacting?
4.6% off the highs after being up 17%, I don't think that's overreacting. I think that's pretty normal. I think it was welcomed. I think the bulls and the bears, including myself, wanted some type of corrective activity because, again, everyone started to feel like they were chasing the markets. Everyone started to think, I don't want to be the last guy holding. So at least when you get some kind of correction, you feel like you get like a re-rack. And when you get a re-rack, you get new setups, you get new buy entries, and you get new opportunities because I think a lot of people were a little bit behind the 8 ball. So all of a sudden, do I believe in what Goldman's note is saying? I do, and if you do, that means that this correction is not going to be 10, 15, 20% off the highs. It could be 5, maybe it could be 7, so I think we're close. So yesterday, for me, I covered, my spiders, and I covered a lot of my shorts because we talked about the spiders 161, remember, gun to head? Well, we went to 161.13, so we're pretty darn close. So with that said, I did not go heavy long into, the close because you didn't know what would happen today. So I think, active traders are going to still stay tactical, and I still think we need some more time before we figure out whether we want to put on an intermediate portfolio approach for more than, day and a half cash flow moves.
Well, I know you like to use the SPX as a visual, so why don't you show us the levels that we should be watching?
Okay, so if you go here, you'll see, there it is, okay? 2 really nice trends. This one started at the red dog reversal back in November. Remember, after we had a pullback last year, right when we broke, we had about, what was this correction? Almost 6.5 to 7%. Then from here, we've followed this gradual trend for some time now. So that's why people are thinking maybe it goes a little bit lower. But what happened, in April is when we hit the 50-day, okay, this trend got accelerated and it was fast and furious and went all the way up to this high here of 1687. So here was your outside day. This was the day to take notice. This was the day to clean up some loose longs. This was the day that some people finally said, okay, here's your signal to get net short. And then from there, you had the wedge. Remember, we talked about the wedge until we were silly. I think every day navigating the lower high, talking about 1640 as major support. Remember on Friday, it resolved lower. So if you want to take a quick look, or let's examine this a little closer here. So this is where it broke on Friday, right there. That was the break. That was the momentum trade that if you happen to be at your desk that last hour of the day, unfortunately I was not. But anyway, we already had our puts on then. Then you had, a quick little, bounce, okay, and then you had the sellers step up where they had to 2 days ago, and then from there you had downside. So now the question with the futures higher, will the sellers resell this? Remember 1622, we talked about if we break below 1622, we'll get on the path down to the 50-day. Well, we stopped right in front of it. Another frustrating point for some traders, because remember we said either it's going to stop in front of the 50-day because people are waiting to buy the 50-day, or we'll purge through for people who start early, so then maybe they can't hold on and then come back above. Well, anyway, here it is, 1622. We're bouncing already close near there. So I think this will be a spot that if we're that weak, they don't let it overcome. But I think your new line in the sand comes in right around 1635. So if you missed this short opportunity, I think this would be an area to reshort the market. And hopefully, maybe if they do sell the market, we get that red dog reversal where it trades through 1607, comes in and tests this, and comes back up. But we'll see. Right now, the futures are up 7-8 handles, and we'll just have to, I think, take it slow in the first 30 to 45 minutes.
All right. Well, the financials have been leading the market up since April, but did give way yesterday. What would you say is a good level to look at for the XLF?
Well, these things finally played some catch-up, and the market wasn't pulling back as everyone's like, oh, look, the financials are that strong, and then finally they played some catch-up, but they're showing relative strength. So today, I think it'll be interesting if they sell the financials on this up open because they're like, okay, I want to still lock in some gains where I have them. So I would say watch the financials to see if they go negative today, perhaps. You look at the chart here of the XLF, here's that outside day, and then this is where it started to hold higher while the market was rolling over, then finally, boom. So now it's up a little bit. I would say watch. This is your resistance, 1973, which I think, where were you born? 1970? Oh, can't ask a woman when they were born. I was 1972. Anyway, 1973.
Well, you think I'm older than you?
No, not at all. You're 12. No. Anyway, 26? 29? All right.
Move
on. So anyway, here it is, 1973. Or actually 1972. There you go. And we'll see if that contains a bounce. Okay, will contain the bounce. Will sellers sell the financials for it to then take out yesterday's low of 1929, and if it breaks and below 1929, then there's the 50-day. But overall, this has been a very strong group.
See what I have to deal with. Now, how about Goldman, which actually managed to close right in front of the 21-day, so it seems like a pretty crucial level for it to hold for the bulls today. Yeah, and that's something to look within the financials because that's held up the best. So if you look here at Goldman, you will see that, I think some individuals like Chart Girl, which I'm going to point out is trading very well, she shorted Goldman through this pivot point saying, okay, market's coming in. There's no way Goldman's going to hang out up here. And then look at this loose range. You have green bar, red bar, green bar, red bar. That tells you that there's some distribution there. So anyway, traded lower, opening up a little bit. So I would say, some will look to reshort this because if we are going to correct a little bit further, there's no reason why Goldman can't see at least 155 considering the last real buy was right here at 150 or even lower on this descending trend line. So I would say, watch to see how Goldman handles this to see whether or not today's bounce could have some, legs to it or it gets a little reversed. Now, would you approach JP Morgan the same way, which after 4 down days managed to close right in front of the 21-day as well? I would. I think, this one had a very straight line move all the way to the top. Remember, we talked about that little king and queens formation where you have a green bar met by a red bar, which is bearish. Then, that day it opened up and fell. This was a little bit of an outside day. Here is your follow through. And now it's holding the 21-day. So I do think it could try and bounce, but see how it handles this 53.70 to 54.5, and then the 21-day is your support. And Bank of America had been one of the leaders, but it also violated its 21-day yesterday after 4 down days. Where's the level that you might test some longs? Well, I've been trying to stick with this all year long, and then I don't know why, but yesterday I sold it. So I think, out of how many days there's been in the last, 5 months or even since August, I think 95% of them I was long. So to me, I tried to be a little cute, thinking that, I think we can get a better buy in Bank of America close to 1260, 1280. So we'll see. I still think higher prices are coming. Here was your reversal. I think I sold it when things were coming down like right around here. So at this point, if it does some work above 13, I'll just get right back into it. And then if it breaks this little descending, trend line that it could develop, I'll buy more through 1350. But I ultimately think if we do get some more downside, I'll be able to buy
a little bit closer to 1282 or even at the 50-day around 1265. So with that said, though, I still think 1550 to 1750 could happen this year, but I'm going to have to just re-enter like everyone else.
Right. Well, what would you do with Citigroup then, with more than 2% of losses yesterday, broke below its 21-day for the first time since April?
I think same thing as everything else. You don't have to pick all the banks, just pick a few,
right,
and then just watch what the group's doing. And if you look here at Citigroup, which was one of the strongest ones, this kind of has the same pattern as JP Morgan, where it broke out and then got engulfed. That was your little sell signal there before this outside day. And now it's coming into some bigger support, and here it is. I would trade it versus yesterday's low.
All right, well, coming up, we're going to go in the trenches with Biotech, which has been leading the market down this week. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with Biotech, which has been leading the market down this week. A lot of these names are already down around their 100-day. Biogen, actually, though, is trying to hold the 50-day.
Yes, and this is a clear-cut example how you have to, especially in a fast-moving group, you have to respect stops. And you also have to know your time frame, because with some of these, you have a few different trends that if you follow got broken, and if you trade shorter term, you could have used them as your stop areas. And you look here at Biogen, you will see that you have a few different trend lines here. Okay, first of all, this was your very accelerated trend line, following the 8-day moving average. So if your thesis or your process gets you out when it breaks the 8-day, this was your stop right here. Okay, same way, it happened right here before, holding the 21-day and then going again. So this was stop area number 1. Stop area number 2 is, look, something potentially different. Here it held the 21-day. Here it had a lot of trouble doing so. So that was also another trend line that could have got you out of the way. So if you are a Biogen fan and you sold here or got short there, whatever it was you were doing, now, up into bigger support, you have the luxury of testing it. So the question is, now, you haven't seen a test of this 50-day moving average since early January or mid-January. So I would say, this would probably be a decent entry, and I would say trade it versus yesterday's low and see, what kind of bounce it can get, and if it bounces up and it gets rejected here, or, starts to build a new base to then go from.
All right, AMGN gave up another 2.8% yesterday. It's now below the 100-day. So where were our selling signals on the way down here?
Okay, well, we always look for sell signals, especially when stocks move technically. You have buy signals, sell signals. I always talk about how entries and exits matter. You look here at AMGN, you'll see, I think this was when it broke out. This is when it looked good, when it went above this, 94.29. Here is your run. Then you had a little bit of a bull flag, continued. And then look at this small little outside day. This wasn't drastic, but, made a new high, couldn't go up. So right there, that was a little bit of a sell signal. And then you had the gap down, and then another technical indication that we use is if gaps don't get filled, they typically move in the same direction of that gap. So if you look here, the gap never got filled. So on this break, you should have been on your toes saying, okay, I'm going to get out of this, especially you look at this minor little wedge within this channel. So here is also a spot where some people might have gotten short. And then that was still, look at that, like 104. You could have saved yourself 10 points if you follow these technical patterns. So then, boom, it's already broken below the 100. It closed in the dead lows. I would say it's at a spot where it broke out from. So hopefully you already covered some shorts there if you were short. And I would say if you were looking for some type of 80-20 reversal, see, I bet you it's up a little bit today. Maybe trade versus yesterday's low and see if it could bounce back to 98, 94-ish, and then maybe even retest this. But overall, you just have to know where you want to play, what your time frame is, because there were many sell signals and tactical type of plays here, as as it all lined up.
Well, let's compare those sell signals to the ones that we might have seen or picked up on in CELG, because talk about a move there. It broke below its 50-day on Monday. Now only 3 days later, it's all the way down to its 100-day.
Yes, and this one also had a big move. And if you look here, on off the charts, we had it as a buy, I think right around here. Okay, remember this long channel? Reason being we had it as a buy here because look at this first move. Boom, digested, and then it continued. Then it got a little wishy-washy. You had an outside day here, engulfing bar, but what did it do? It held the 50-day this time, then it made new highs. And remember we talk about breakout failures. I hate when that happens. Well, here it tried to break out and came boom, right back into the base. So if you didn't sell there, I understand. But at least that puts it on the radar saying, okay, something technically shouldn't have happened. Okay, and here it happened and didn't amount to anything. This time it wound up breaking this trend line and broke below the 50-day, which was able to hold, so something different. Now it's at the 100-day. So with that being said, same type of scenario. If you're looking for an entry, trade it versus yesterday's low. If it opens up and continues to go higher, maybe you get a spot to play a bounce up to, and that's like 119-ish or right around here. If they try and bring it down and they break yesterday's low and it comes back above, then you have your red dog reversal. But overall, you got to follow these technical rules, especially if you trade on an intermediate basis. And
Gilead broke below its 50-day. Does it look as though it's headed to the 100?
It seems like all of these are taking their turns, and all of these have traded with decent trends. And we say the trend is your friend until it changes. Look here, not much different. Here, just taking a quick look at it, because I don't look at this all the time, all of a sudden you see a breakout failure. Okay, pushed through, closing the lows, a little bit of an outside day. This is what we call red dog reversal also, right? Pushes through a prior high of 56.85, puts in a new high of 58.06, comes back down. Some people would short versus that high. And if they did that and they followed their rules, it never broke back above that, so they could have stayed short. If you didn't get short there and said, I'm going to wait to see another clue, so to speak, you have two different trend lines here. You have one all the way back to start, and then one more, accelerated here. And, once it broke this little zone, that was your exit. We don't talk about these all day long, so you have to draw these lines yourself if you're in there. And now, if you sold it well, you have the chance or the luxury of maybe buying it back. It came a little bit off the lows more than some of the other names. But, it's going to need, these things are going to need a lot of time now to rebuild new bases. But again, here's now your bigger resistance. So if it wants to try and bounce, it can. I would just be a little bit more careful.
All right, time for some quick hits here. Let's talk Tesla, which actually managed to post some small gains yesterday when markets were red. What are the levels that we should watch now?
I have to tip my hat if I wear a hat, which I don't because I'm getting these little spots there, to Sperling. He was all over Tesla. There was relative strength all day long, and markets bounced a little bit in that last half hour and had to move. Stock still trades very well, technically still looks good. It's holding this trend line, so if you want to stay long it, on an intermediate basis, stay long it. It held at 21-day. And then now you have this small little lower wedge. So I would say, short term, if it were to break above 98 and you're looking for a quick tactical trade, then that could be a good little long for it to then retest this 101 to 102 area. And then, but overall, it's probably going to need a lot of time before it ever decides to break above this again. And if you remember this outside day, which was 110.75, look at that nice 3-day down move, with the continuation right there. So right now we could be coming back up to retest this. Overall, I think the sky is blue for Tesla moving forward, but it could take 3, 6, 9 months before it makes new highs. Maybe sooner. It's a crazy stock, but overall, technically it's holding in there. And then I would just, watch this support, and then above this with the heavy short interest, maybe you get another little trade back to 101, 102.
And from Tesla to Solar City, got a nice push yesterday. Could it be ready to start picking up some momentum?
Well, I don't know about momentum because they still have a huge lockup coming in next week, but yesterday we talked about the potential red dog reversal in it, I think 36.50, and it happened really quick off the open where it tried to break below this level here, which was 36.50. It went as low as only 36.10, so if you bought it when it went back above 36.50, 40 cents was your risk, and it wound up rallying pretty well. Now you have a little, little pivot area right here, so if it were to trade above, just say this 39.81-ish or 40, you'd probably see a move to retest the moving average or maybe even to 45. But overall, I think this also is going to need some time. It's had a heck of a move. You're going to probably have to build a whole new base up here. So if you want to trade it on a micro basis above this area, maybe you see this resistance, and if it really gets a little bit momentum and people don't sell on the lockup, perhaps it comes back to there.
First Solar actually found some support at its 21-day. So what do you think of the composure of this one?
This one I feel like it's just, it needs time. I'm not even going to go over it.
All right. How about metals? Let's check in on the GLD, which actually held short-term is holding its short-term uptrend, but it's still getting pressure from its 21-day.
It's getting tighter. I'll look at the GLD right here, and you'll see that there are some people starting to get bullish on the metal again because it's so quiet and so people are so upset with it. I would say right now you have a little bit of a wedge pattern here. Okay, if it starts breaking above 137. Perhaps you get that move back to 140, but make sure it stays above it. So many times it started to go, and if you stayed with it, you didn't, make any money. But, overall, I think the trend is still lower. If it were to break below 134, I would say just get out of the way. And the major thing here is a double bottom at 130.50. That is where, I think most people are going to start to, on a macro basis. Remember, we talked about, different types of time frames. Here was 161. That was your intermediate. This was your macro break, so now it's coming into another inflection point. So I'll have my eyes on it to see if there's any opportunity.
Well, and if you're looking for relative strength in this market, look no further than Amazon, still looking good.
Yeah, this one, 2 quarters that were very unimpressive, and the stock still is close to the, its historic highs. So that tells you that they're waiting here for something good, I guess. It hasn't been able to cross this downtrend in a long time. So for me, it tried a little bit yesterday. If it starts to get above 272 with heavy volume, I think you get long this. And then all of a sudden, historic highs is 284. You look at the monthly chart, not much of a pullback. Okay, trending on the 8-day, flagging up here right near the highs. They've been, with this one, they like the trend. People long this has been, they've been doing very well. On the opposite side of look at Apple, Apple from that high, boom. So, just to quickly go over Apple too, I think Apple for a quick hit is at a little bit of a crossroad. You have this left shoulder, head, right shoulder, but you also have this small trend that got tested yesterday. So with that being said, you take a micro look here. I'm still in the call spread. That's probably going to be worthless. But overall, I'm out of the stock because I didn't like the way it acted yesterday. If it starts getting back above 450, I think I'll get back involved with a little bit more size. But I would be careful if you start getting below this 442 area and it breaks below the 21-day. I think that fast money will leave and, it turns back into a B- to C+ trade.
Well, ahead of tomorrow's jobs report, investors will likely pay attention to today's weekly initial jobless claims data. Do you think that could shake us at all today?
Well, I think, the language has changed where when we were going higher, good news was still good news and bad news was good news because that means the Fed's staying the course. Now I started talking yesterday, and I've been seeing stories written about it, and also, John Darcy, who's the editor, also has been saying it a lot recently, is that now it feels with the market coming down and the Fed saying we need to taper, like, okay, good news means that they're going to taper, bad news means that QE is not working. So it's more like glass half empty. So I think, tomorrow, if I'd like to just see like the numbers in line. If the numbers are in line, I think that we might bounce off the 50-day and see what the stock market is, what the metal's made of. But if it's really bad, okay, I think that the market's not going to say that's good because they're going to say, okay, the Fed's been doing all this, spending all this money, and we're not getting the jobs. What's going on here? So that could be viewed as a negative. And if it's really good, I think you might get a quick flash down saying the Fed's going to be out of the way. If it's a really hot number, but then I think we come back because they'll be like, okay, what they're doing is working, but the market just has to lower its expectations about, the rate of increase. And that's my story.
And you're sticking to it.
Yes.
All right, happy trading, everyone. Have a great day.